Hello, hello, welcome to your daily Outlook for Gold. Hope you are still managing those trades from the downside. For the ones who are still holding, beautiful, congratulations. You deserved really nice trades today. So the daily candle, massive one, closing, engulfing all that area there. And this was just plain and simple breather. The candle we were having the conversation in the previous session on Monday, basically. And Akshay was talking about this specific candle, how this candle can just become a breather before the breakout either direction, especially to the upside, because that's the candle that we had from Friday. And the carryover for the orders from Friday usually happen on Sunday afternoon toward the Monday session. Now, that didn't happen on Monday. Now, this candle broke the low of that candle, picked up more liquidity, fishy area because the previous daily there, right? The previous daily established a certain rejection zone from this specific area. When you pull up the lower time frames in here, give me 1 second here. When you pull up the lower time frames in here, price basically last night just gave us that break below this area. It gave us that beautiful break below this area, making us believe, okay, the continuation makes sense for that continuation. And overall, the move that made a lot of sense, by far, still the bearish one. Why? Because we are in a downtrend in a higher time frames, but we've been looking for that specific move to the upside, and it was matter of time. Everything was aiming for for the election day or the CPI day. So that's the main idea. Now, this morning, what happened? What happened this morning from that rejection from London, basically, it was a beautiful reaction coming from London volume. When you pull up the lower time frames here, and the things that we discuss on a daily basis is, where is my secondary resistance? My secondary resistance, apart from this mess over here, secondary resistance is that one. Where is my daily high? My daily high is over here. A rejection from Asian session. Now, most of the times, nothing is written in stone. Price is just probabilities. Trading is probabilities in the market. It's just that we have seen those things over and over again, that it becomes easier for us to spot those specific ideas. Now, from that from that previous structure there, price closing like a king inside this previous resistance, all these previous areas of reaction becomes kind of the maximum pullback for whatever happened later on in the market. And then it comes to the point that we are basically approaching to the New York session, and in here, right? This is basically the pullback to the previous zone. At that point, this is becoming really important in the market. Why? Because first of all, you have the key level here, that 70 key level, that 1670, and most of the times, if price goes to a certain key level and respect the key level by 10 pips below, is still valid. The key level is still valid. And look what happened here. That price started just to reject those areas there, and this one right here. This is your breakout candle. The secondary structure is this one right here. The moment you have a secondary structure not being able to hold as a resistance, then you know that your overall bias is not sells anymore for the day. At that point, the previous 4-hour candle from London, right, created a beautiful reaction from those lows and closing like a king. This candle here, a beautiful close. Heavy one, heavy closing there. And at that point, the only candle that you may look for is the confirmation that support has been established, which is the second candle. When you have that candle there, is not formed yet. When we come to the 5-minute candles here, this one right here, this baby candle that we love to see almost on a daily basis, because this is the bread and butter. This is the one that creates a little bit more of a volume in the market, and overall the direction for the session, or the rejection from previous areas of reaction. What this candle have, in a different from a different standpoint. When you look at this on this candle here, see, this candle was breaking to the downside and rejecting completely. This is your COMEX open from Monday. Now, look what happened here. This, by far, is not looking like a reaction. This is a beautiful closing. This is your breakout candle. Say, hey, I'm here. I have enough volume. I had, enough information. So look for that continuation. price closing above the secondary resistance, which in this case is this one right here, what you have as previous areas of rejection and previous area of support needs to become your area of contention. This price point in here is perfectly aligned with the breakout candle. When the breakout candle happens, most of the times price will come back, retest partially those areas, and as long if the low of that candle is being respected, you don't have any business changing your bias. Why? Because yeah, you may say, well, I can scalp for 15, 20 pips to the downside there, but they can be dangerous. This candle have enough volume. First of all, the 4-hour candle coming from London session have enough information. And this candle here, from this specific close, kind of the same that tends to happen on NYSE, that's basically the continuation. And look how price came to this specific level so many times, and it didn't find that continuation. Why do you think that is happening? Oh, because maybe Ted Safranco, maybe Raja Banks managed to get in those areas, and they're going to manage that volume all the way up. Big boys, this is, just giving you guys an idea. If big boys already grab, their price point, this is for dummies. The one that may say, oh, yes, the correction, I'm going to continue selling. If you don't have anything leaving the low of this candle and closing below this previous area of resistance, which was a massive area of resistance in here, then you're basically just feeding the market. You don't have any business straight into the downside if you don't have a single close below that resistance, and especially breaking the low, closing below the confirmation that the confirmation that the breakout already happened. So from now on, all your information is based on this candle, and the continuation should be there. The moment price, obviously, right? The moment price is breaking this high, then it's not resistant anymore. And I'm not talking yet about the 15 minutes and the 30 minutes. Just to have an idea, you guys can have an idea as a form of recap what happened this morning. And you guys were surprised how I predicted it this morning, a heavy move to the upside when I had the candle closing with the 4-hour with New York volume. Now, something that is a breakout, closing like a king outside the secondary resistance there, the pullback makes perfect sense to previous areas of rejection. If price is giving you the same here, what do you need? Volume in the market. This candle here, let me go back in here, and I'm sorry that I'm making this a little bit longer than expected, the daily outlook, but look at that closing there. Do you believe this candle here is closing more like a rejection or looking more like a continuation? Where do you have previous reaction? In here, you have another, kind of rejection in here. The moment that candles are opening and closing at certain areas is because they're information in the lower time. And so you don't need to be guessing what happened on the 1 minute, 5 minute candles, 15-minute candles. No, you have information in a higher time frame. This candle closing back inside that range makes you believe the easiest job is looking for the continuation, Wakefield to the upside there, to retest the high of the current New York session, and at the break of that area there, we already have seen this a lot of times. The price create a break outside the secondary structure is because it's going to the daily high. The daily high was roughly there, 1676.64. What is the maximum contention? If you have any pullbacks and heavy areas of rejection, let's say, maybe these areas of rejection, maybe a form of a certain key level that you may have here, and the key level you have is way off the previous rejection, so you're not expecting that move to happen at the below that 4-hour candle. Now, when you have this specific information here, that candle, again, another support rejecting that area. This is a beautiful support that has been established, and at that point, the moment price is leaving that area is because it's going for the daily high. This was the daily high, and at that point, if you look at the daily at that point, man, the daily was looking so beautiful for that upside move. And in here comes the trick. Give me 1 second here, because I want to do this play by play, right? Breaking the daily high. This is another one for the books. This is another one, so you can learn something new today, maybe. This is a resistant candle. If the continuation and the reaction is valid, this candle needs to break this low and respect the high. It did the opposite. At that point, this is too much confluence in the market, too much information. If you don't do something about it, then you just basically playing games in the market. But when you have this kind of information, volume, and don't tell me, but I only trade the hourly candles, I only trade the 4-hour candle. If you don't think 18 pips on a 5-minute candle as a possible stop loss is enough volume to consider, then I don't know what to tell you, my friend. At that point, what do you need? A candle that can start leaving the previous areas of rejection, then you can easily consider those things as an impulsive entry. Why do you think this move right here was quite easy to spot at that point? Why? Because price is not respecting the key level anymore. This is your 80 there, and price is not respecting the key level already, breaking 10 pips above the key level makes it kind of easy for that continuation. It was just simple continuation in one single shot. I'm not gonna lie, I was expecting a 50 pip move only toward the 85. But if market is giving me that information with momentum, I don't have any business other than just look for continuation. The other trade that I had was in this area here and was basically just a beauty of trade, you know, plain and simple continuation. So going back, that was just a small recap there. Going back to the daily outlook here, where do you have the main area of contention at this point? If you have to look to the left-hand side on 4-hour candles. On 4-hour candles, don't get too carried away because there's still, you know, a little bit more of a headache here to be facing for the rest of the session and for the rest of the week. We have CPI tomorrow. So be really careful the way you approach to trading tonight and tomorrow morning. This area here, roughly the 1730s, is the last frontier. Anything that can give you a close and a break outside this area, most likely we're not gonna see price just basically other than breaking above the 30, going back to these previous areas, maybe the 1700, which at this point, the daily candle, the 4-hour candles and lower time frames, the deepest pullback I wanna see is the 1700s. As a form of key level, is strong. As previous areas of contention, I have enough information. You can call it order block, you can call it whatever you want. Imbalance, you can call it whatever you want. But for me, it's just plain and simple psychological level, a key level. 1700, the same that the 1650, 1750, 1800s, all those key levels. Main key points in there, psychological levels, strong ones. So that's basically the maximum pullback I want to see on gold overnight. Price going to this area. Based on a structure, we have to be really careful because in this area here, these candles right there, this is your previous range. So as right now, this is looking like a fake out. Leaving this area because we are gonna, you know, they're gonna start counting the votes, no, you know, in a little bit. If not, if probably they're already counting the votes for the elections. Anything can happen, like a heavy correction in price and not only going to the 1700, but correcting the whole move. You know how gold behaves. Sometimes gold is behaving like bipolar. It loves going in one direction and then correct the whole move because when those moves are based on rumors, then you know this tends to happen and the whole move get corrected. But for me, it's a no to look for continuation to the downside or to look for the pullback because you never know how deep the pullback will be. Will the pullback be, you know, 50 pips to the downside? Or can I wait for the pullback to happen and look for support to be established? Another 4-hour candle from London session maybe that can give me the support or maybe a confirmation that resistance has been established so I can look for that continuation. But until then, I don't have any business. The move from last night was quite interesting as well based on the 4-hour candles, how that move to the downside happened. But it was a plain and simple pullback. I don't sell the pullbacks. I wait for the pullback to, you know, to be done, and then I'll start looking for support to be established based on higher time frame, and I know that the odds are there for me for that continuation. So I'm gonna make it really quick in here. When you pull up the 15 minutes, if you have enough volume, you can lower your time frames to the 5, but the 15 minutes during Asian session in London is a safer confirmation. What may happen here? The previous rejection is this area here. So I want to believe this rejection is a fake out. Price can come back to this specific area here. When you look left in this area here, right? When you look left, let me pull up the 4-hour is not gonna be, you're not gonna be able to see. But this area here, when you pull up the 50-minute here, right? You have previous area of support in here. So all this area can give you exactly the same thing at this specific price point. So price can come back and start creating those just plain and simple range in here before the continuation to the upside or before the correction to the downside. For the correction to the downside, I would love to have two 4-hour candles. One that is giving me the resistance and the other one that is breaking the resistance candle. At this point, I only have one candle. This one right here is this candle here is my resistance. Respected the previous candle, the impulsive move in there. So the safest option is looking for buys still above the break of the daily high, or as a form of correction, if any 4-hour candle managed to close below this candle, break below, then a pullback to previous area of support, which in this case will be the 1709, let's say, and a possible correction may happen from those areas. Other than that, my friend, be really careful. The only reason that I think that those sells can play out is because we have CPI and because they're going to start counting the votes. Depending what they find for the elections, this whole move can get corrected. So be mindful, be aware, be smart enough, and trade what you see and not what you think. What I see here is a heavy move to the upside, kind of expected, really nice and easy. Became a really nice and easy move to the upside. Still holding, you know, some runners there, 700 plus pips on runners. Doesn't matter. The information was provided this morning, and the momentum was in our favor, and that's why we capitalized on that move. So it was plain and simple. So as a daily recap, daily outlook recap in here, I don't have any business looking for moves to the downside. Yes, they can happen as a form of correction in price because this was basically based on the election. Maybe that's the only explanation I can find about this this heavy move to the upside. And good. Now, having a close below this area and a 4-hour candle that can close as a bearish candle there, then I will have to wait for a pullback, previous areas of resistance, or to previous area of support if support has been established here. Other than that, if I have a support candle here on the 15 minutes and prices start giving me a continuation to the upside, that's the one that I will look for that continuation. You know, like price can easily start just ranging in here, creating lower wicks. But the moment I have two 50-minute candles here and a 50-minute candle that can give me a close above this area, I will take in consideration the break of that high. I will target probably this area here, if not a little bit higher, and that's gonna be kind of the other trade. Something that overnight can give you a 50-minute candle closing above that area, at the break of that area there. Remember, the main idea with the weekly candle, if we manage to get there, is going to the 1730s. You may say, I'm crazy, but that's the way that gold behaves. And the only thing that I can do at that point is just take advantage on what the price is doing at that point and go from there. So from now on, that's gonna be pretty much it. I will catch you guys later on London, most likely, so we can discuss more ideas. Remember, this is a resistance. This is your range, right? This is your previous range. This can be considered fake out unless any price coming to this area tells you different. If price comes to this area here, start leaving that area, and you have a 4-hour candle bearish, leaving that area, then the correction may happen. Currently, what you have here is a 4-hour candle that already you know, created that resistance there. So what you need is this current 4-hour to break, or any other 4-hour, doesn't necessarily needs to be the one that is trading right now. A 4-hour candle here, the next one that can pull back a little bit to these areas or maybe to these areas here, and the moment price is breaking that low, that whole correction can happen. We have CPI tomorrow, so be mindful, be smart, and protect your capital, protect your account. Don't go too hard, and if you're looking for that move to the downside, do not risk much in that specific area because you are counter trending something that is looking simple to the upside. So be aware of that, lower your risk, let price, you know, give you the information, and then with the information that price can provide you, then you start, you know, you go from there. That's gonna be pretty much for now. See you guys later on, and see you guys for another wonderful session tomorrow at New York. Bye-bye.